Hello guys, welcome to my second day seminar webinar classes. Okay, I'm gonna start with today. We're gonna start with candlesticks, price actions, and Fibonacci. So very important, guys. This is called the technical analysis for the forex market. Now, if you really want to trade forex market, you should have this technical analysis added on your screen. So you should know the technical levels, the technical fundamentals are always there in the market, but we should know technical level as well. We spoke about uh, we spoke about the support and resistances. We spoke about the supply and demand zone. So today is all about the Fibonacci ratio. So as I sent out to you guys about the my tools is called AAA tools. So if you have my tools loaded on your screen, so you should be watching the screen, where you can see this Fibonacci ratios and all this, uh, trend lines and this pivot points. So this is how you're gonna look at the market. So I'm gonna take the Euro US dollar chart at the moment. I'm gonna explain it to you how we can trade using the Fibonacci's, how we're gonna trade the candlestick pattern using the technical forex market. Okay, so here we go. So once you load your screen, okay, since we have already built this indicator, you don't have to add or do any manual addings to your charts. Okay, so if you have my indicators already, you're gonna have this everything, the forex Fibonacci ratios for the daily trader. It's gonna be displayed right away. Okay, so right now I'm just gonna go ahead and just mark few things for you guys, because then I just want to make sure that you know what I'm talking. So if you see, look at this Fibonacci ratios: 61.1, 61.8, 61.8 here at the bottom, 100% to 138.2 Fibonacci ratios, 100 Fibonacci ratio. Okay, the pivot point. Okay, so let's give me some example about the pivot point before we just continue. The pivot points are the one which gives you the market midterm. I mean the middle of the daily trading chart. Okay, so this is something that you should always look at. Okay, so pivot points are the mid of the daily high and the mid of the daily low. Okay, if you look at this here, this is the pivot point for today. If you want to trade the market for today, that's the pivot point. So yesterday the pivot point was somewhere here. Okay, it's in the blue line. Okay, if you have my Fibonacci loaded on my screen, and you should be looking at that. Okay, so whenever you want to trade, so as we discussed yesterday, so we have to have the trend line loaded here. When we are on the trend line and we know we know where to buy and where to sell, and we know the support and we know the resistance level here. Okay, so support and resistances are very important when you really want to trade. At the same time, you should also look at the pivot point as well as the Fibonacci ratios. If you see the market now trading above the pivot point, okay, above the pivot point, and we see a couple of candles lining up right there. Okay, we see those couple of candles lining up there, and you can see the Euro US dollars is heading up after this trend line support, and we have pivot. Now a pivot also act like as a support, and if we can see this 61.8 as a next Fibonacci ratio, which will be a next resistance. Market already tested that level, but still we have so many support here, so market couldn't break this zone, and now it's climbing up. Okay, so whenever you look at the Fibonacci's, whenever you are trading the Fibonacci's, always look at the three zones. Okay, one is a 38.2, 61.8, and 100%. Okay, so these three ratios are always very important. So never ever underestimate the pair, the price whenever they reaches to these zones. Okay, so using my tool, you're going to go long because this is the US opening right now, and we have a lot of support. And if you buy this price somewhere here, what would be your next target? The next target should be your next Fibonacci ratio, okay, which will be 61.8. Okay, so here you're going to take the first profit. Okay, if the market breaks above that, so their next target would be 100%, and the final would be 138.2. So market going to reject the price when it reaches to 138.2. So 138.2 is just the 38.2 ratio, but market going to reject really bad on that. So you don't want to be staying there if you really want to take the profit and get out of it. Okay, so that's how we play with the Fibonacci ratios. Okay. So let's take an example on pound versus US dollars today. If you look at the market today, the market has been really bearish for the pound versus US dollars. Okay, so euro US dollar is going up, So you can ask me a question here about pound versus US dollars. When euro US dollars is going up, why would the pound versus US dollars is going down, and what's the matter? Okay, so again, guys, there must be so many things in the economy. There must be a news for the pound, there must be some market sentiment, there must be some political uh, views on the pound versus US dollars. But let us look at the market in our trading technical view. If you look at the market for today, here is the pivot point. Okay, the pivot point is right there at 1.3267, and you can see the Monday Asian session market rejected that level with some couple of bearish candles, and the market dropped to 61.8, break to 61.8, then 100%, and then went back to 138%, and it's broken that level too. So if you look at the technical aspect and technical level here, you can see clearly that market is rejecting the technical because the market is not holding any support at this zone. So whenever you trade, when you get up in the morning, maybe you're from US or UK or any Europe countries or in Asia, you should look at the pivot points. When the price is above the pivot points, and you should understand that the market is with the bullish level. I mean, with the bullish support. If the market is below the pivot points, then you should understand that the market is under bearish control, under bear control. So what are you going to wait for? You're going to wait for a couple of candlesticks, as we spoke about it yesterday. You're going to wait for a couple of candlesticks rejecting the price, and we're going to wait for doji candle and some bearish candle, really bearish candle like this. Okay, and you're going to wait for a pin bar, about the price, the market, doji. We're going to wait for the couple of candles that way. So if you look at here, you can see there is a doji formation. Okay, if you really want to see what I'm talking about, here we go. I'm going to show you why the market has rejected and it's continue falling. Pound versus US dollars has been a great sell for us today. Okay, you see the doji here. Okay, that's a rejection. The market rejected the daily pivot, and it continue. Okay, so it's continuing falling downwards, and for us, you know that the market rejected and it's in the bear's control. My first profit should be 61.8. Here I'm going to take the first profit, but the market did not just wait do any kind of bullish reversal right there. Okay, it's broke. It's a H1 candle. It's broke directly, without respecting any kind of support there, and went and stood on the 100%. And then the market had a little bit of consolidation when it still broke below the 100%. So that's a really, really big bearish candle. I mean, that's a big rejection on the Fibonacci ratios. Okay, so that is why that is why you should always look at these kind of technical levels if you really want to trade on a daily basis. So that's going to show you, even if you don't know about the fundamental, if you don't know about the economy, news, or anything in such way. So that's going to be very important and very, very informative if you really want to trade using Fibonacci's. Okay, so now we know like how we're gonna trade the pivot points. Now we know how we're gonna trade the Fibonacci's. So this is how you should understand the pivots as well as the Fibonacci ratios up and down. So I just want to just give you some combined brief about the what we just covered. You have to have the pivot. Okay, so when you want to trade the market, you should look at the pivot points, whether the market price is above the pivots or below the pivots. Okay, so if the market is below the pivots, you're going to look at the couple of candles rejecting the pivot, and you can look at the bearish reversal patterns, candlestick patterns like doji. Okay, a bear candle, right? So hanging man, or you can see the evening stars, a morning star. Okay, so that's the indication that the market is really rejecting the price. Okay, it's going to go down, so you have to get in. So what would be a next target? What would be a next profit taking level? Would be your Fibonacci ratios. Okay, that would be your Fibonacci's. For your next Fibonacci is there are three Fibonacci ratios. The first one you're going to take at 61.8. The second one you're going to take 100%, and the third one you're going to take the 138%. So that's where you're going to take your profit and get out of the market. Okay, and wait for tomorrow. You're going to have the same Fibonacci ratios displayed. You're going to have those pivot points displayed for you, and you can still trade the market on another day. Okay, so if you want to trade on a daily basis. So now I'm just gonna explain another chart for you guys. That would be US dollar versus yen. Okay, so let's talk about the US dollar versus yen technical levels. Okay, maybe we're not sure about the market fundamental market situation at the moment, but we know the technical level right here. If you want to trade, you can see this. There's a pivot points. The market is below the price open for today. The market below the pivot points, and you can see a couple of candles staying below the pivot points, and and breaking the 61.8%, breaking 600%, and then breaking the I'm trading below the 100%. Okay, so it's not necessary. It has to always go to the 138.2. It's not necessary. The market will have it has to go to 38.2, and then it will 138.2, and then it will retrace. Okay, sometime it's all about the sessions, US sessions, India Asian session, and London session. Now you can see it's broke all the support zones, and the market is trending below the zones. So it's a bearish reversal. Okay, so if you had entered the market at this level here, what we are talking about, after breaking this 100%, looking at those bearish candles, now you could have easily take a profit on this 138.2. which would be like around 40 to 30 pips, profit for you guys at this zone. Okay, so this is how you trade, guys. This is how you use your fundamental, on the technical aspect. This is how you use the Fibonacci ratios and um, Fibonacci uh, ratios and the candlestick patterns. Okay, so that's it, guys. So that's it for today. So we have covered the important and the key levels, how you're going to trade, where you're going to trade, and how you use the Fibonacci ratios, how you're going to use the candlesticks, So anyway, I'm getting it recorded for you guys. So I'm going to just share this with you guys tomorrow. If you're missing this, so we're gonna cover this. If you have any questions, just hit me with any questions in 5 minutes. And in 2 minutes, I'm gonna just stop this recording and stop sharing the video.
Hi Manju, can you please explain? Yeah, can you please explain to me the lot value 1.00? I mean, how much the value of one lot?
How much is what?
How much the value is of one lot? If you are doing a transaction of one lot, which means 1.00, how much is the value of that one lot?
Say if you trade 1.00 lot order, if one pip is gonna be $10. Okay, if you buy, for an example, if you buy this pair or sell this pair with one lot standard, okay, so you're gonna have $10 per each pips that you're gonna make. For an example, okay, let's forget about the broker commissions, okay, the spreads. Okay, suppose if you buy a currency with one standard lot at 12 rupees, okay, for an example, $12 or 12 this is the price, okay, this is the basic price. Okay, so for an example, as soon as you buy this, the market goes to 16 rupees or $16. Okay, so you have plus 2 points, okay, because you bought it for 2, it's now at the 16. So if you trade 1.00 lot, okay, if you buy this for 12, so you're gonna have a profit of $20 in your account. Okay, so one lot, when you trade one lot, your price, you are trading 1 pips per $10 per pips. Okay, 1 pips equal to $10 for you. If you trade 0.10, it will be $1 for you. Okay, if you trade 0.01, it will be 0.01 cents for you. Okay, but if you want to trade in a bigger lot, you have to have the bigger account. You cannot just go and trade using the small account with the big lots, okay, because you're going to risk a lot. Okay, so it's always necessary that you use the money management. You know what I'm saying? Yeah, sure. I will give you another example. Let's go to gold. Okay, gold chart. Okay, now you open the gold chart. As usual, you will have all the Fibonacci ratios listed, and you will have the trend line listed, and you're gonna have the moving averages. Okay, I didn't tell you about the moving averages, guys. Just make a note of it. I use 3 moving averages. One is the 20, second one is the 50. The 20 is the one which is the green. 50, and this is something that that's another indicator. Okay, so 20 and 50. 50 is the black one. Okay, so whenever the price comes to below as a support, okay, just take an example here. If you want to trade, because moving averages is really important and very nice when you're trading. So you see this pivot point here. Okay, the market was opened here for today and had a rejection and traded consolidated for a long below the pivot. The market still not break on the pivot points. That means the gold is still under pressure. Okay, as long as this stays below the pivot point, that means it's still under pressure. Okay, but when it breaks above this, and for any kind of news, if it breaks and hold a candle above the pivot point, that means it's under bull's control. But in US session, most of the time, you know, since the volatility goes down, so we cannot just enter the market using this technical stuff. You know, it has to do everything in Asia and in UK. If you have everything clear in Asia and UK, I think we're going to make a good profit in US session. So if you look at the market here, it's still consolidating for me. But I know there's a trend line. It's holding the trend line support right here. So it's still under the support. But for me, for selling, okay, I do not see much clear candles, bearish candles here. If I really want to sell this pair, but right now, sell the gold, but I can see the big candle, but there is a sales resistance right here. So this is the zone where the market is reacting to. This is just a consolidation. Well, I will not sell the gold today. Maybe I'll look at the market tomorrow. I will have I need few confirmation wherein this price or this market should be under a horizontal zone. And plus, the market should be rejecting the pivot points in the Asian session or in the UK session. And I should have some Fibonacci ratios at this zone so that I can keep my stop loss at the zone above that, and I can enter the sell and I can take the profit to the next Fibonacci ratios. Okay, so since we have no much important news today, so we won't be trading gold. But if you look at other page, we had news for euro, we had news for pound versus US dollars, pound. So we can see the market reacting to it. Okay. So yeah. So you want to ask more, or you have any more questions? Okay. Well, yeah. So I hope you understand. I hope you got the today's market condition. Today's classes. Okay, just make sure whenever you're trading, use the support and resistances and the trend lines, as well as also look at these Fibonacci ratios. Okay, so whenever I send signals, okay, you're not going to learn on this in a one day, or you're not going to learn if I just give you the complete explanation how to use this indicator. But if you watch me sending signals on a daily basis, you just go to the chart and look at those zones where I'm sending the signals, at what time and what level, why is he sending the signals. Okay, so you're going to understand the concept of trading. Okay, even if you don't look at the chart, when I'm sending the signals, you can still look at the charts. Okay, open all the pairs that you are interested in. Open all the pairs, look at the charts, look at the levels, look at where the price is rejecting, how the price is reacting to those zones. Okay, and at the same time you look at the pivot points as well as look at the Fibonacci ratios, and you will understand, why, like how we can use these Fibonacci's ratios to trade effectively. Okay, and if you have any questions still, you can ask me. Okay, well, we don't have anybody here today, I mean, except you. I think Isaac is missing today. I'm recording it. Yeah, I'm recording. Today I spoke to Steve. He said, okay, when you get it recorded so that we can show it to people when they miss the live session, so they can watch it later. Okay, so yeah, I'm ending this session. I'll be recording, and I don't know how I'm going to send it to him. I'll ask him the options to send the videos. So thank you, Mo. Okay, thank you for joining my webinar. So it will be available anyway, and if you have any questions, just hit me in the Telegram channel, so I'll be more happy to help you. Okay, have a nice day, bro. Bye bye.